Hello and good day traders. Hope you are enjoying the weekend. This is the analysis for JPY, uh, Euro and Japanese yen. So let's see what is happening here. Currently I'm in monthly time frame and you can see this. Each time it break the structure, it move upward. It broke the structure here, it went upward a little bit, pull back again, it broke here the structure, move upward a little, pull back, it broke the structure a little bit, pull back, it broke the structure here a little bit, pull back and moved upward. And for the last 4 or 5 months we are seeing that the upward traction is getting exhausted. No market can be bullish all the time. So here it broke the structure. This is a very big pullback. Again the buyer took control and tried to move the price on the upside. Again it broke the structure. There was no pullback in October. In November we have seen a very big candle, bullish initially. Later it turned into be a inverted hammer. uh, you guys can see this. And now in the first day of December it has almost tried to change the character here. So actually let us remove all this thing. This is how we measure the depth of the market, try to understand what is going on. So now I think the market is getting slow now. Because if you see this trend here, the candles are much the spread of the candle is much lower in compared to this guy, this guy, this guy, this guy, this guy. All these candles have bigger spread, whereas this for the last 1, 2, 3, 4, 5 months the candle spread is getting low, which indicates that the upward traction is getting slow. Still it is a bullish trend, undoubtedly, there is no doubt, and the bullish trend is still happening. And if we see the big picture is that the double top, possible double top in monthly is standing here. There is no other places we can have double top in monthly. So either it has to fulfill its journey up to here. If not, if we measure the length, the total depth of the market from 2013, I think, if I'm not wrong. Yes, it is in 2000 January 13. This is the depth of the market. If we measure that, and we have almost achieved 90%, if I'm not wrong. Let us see. Hold on. Let me move it. Let me move this guy a little bit up. Yes, now we can measure the depth of the market, the total depth of the market in monthly, as it is ranging within this range from 2013, almost 10 years. So the 90% has already been achieved. Now my analysis or my take from monthly, that we have a very big rejection here in last month, and in one day it opened and it came down a little. First of all, we'll look into this matter. If it breaks this red candle breaks this zone, then we will call it a change of character. To be honest with you, I'm enabling it in all time frame, and once it again it break this zone, this line, if it breaks this line, then it will be change of break of structure. So keep these two things in mind initially. That's the analysis or take we can have from monthly. Let's move to weekly now. In weekly, last time I have clearly mentioned, again the break of structures are here. Let me remove all these things, we don't need them, as we are. And you guys, can you guys see something here very interesting, that the market is bullish, right guys? The market is bullish. Now the market is ranging here actually. Can you guys see? The market is ranging for a long time, and it tried to push the price on the bullish side, but it doesn't yield that much as it yield from this range. If you see that if we measure this range, the price has been pushed to this level, so almost the same. It is 1087 pips, and if we see, it is also 1144 pips more than the range. But here, if we see the range, if we measure the range here, guys, it is 830, and 830 should be somewhere here. Okay, but the market failed, as we have seen already in the monthly time frame, that we have a very long shadow. So before that, in the last week, I have mentioned that there is a fair value gap here, and fair value gap of these guys exist here, and here also fair value gap which has not been addressed. So this thing has been taken out by this red very big bearish candle, and we say this candle, we say it very simple. The technical term is called outside the candle, because it engulfs this candle, and this candle. 3 weeks candle has been engulfed by a single week candle, and this happened last week, and you guys see that's a very powerful engulf in bearish side, and the momentum is very powerful. So at the moment, seeing the weekly thing, you can see that the price is getting, because always I say that whenever the price want to go to a upward trend, then what will happen is this, that it will go upward, then it will try to be straight, then it will come down. Or maybe the other scenario we have seen is this, that it is going upward, it is getting straight a little bit high, then it will come down. And this is the scenario we are watching here. If we can do the same here, that the market was going up, and here it is up and getting straight, a little bit push, and then it is coming back. It lost its traction on the upside, all bullish side. So still my suggestion is this: we have this fair value gap has been left, and this fair value gap has been left, and we don't need this anymore. And you can see in weekly time frame, if we measure, this is the change of character, and this is the break of its structure has already done. It is done, my dear. No one can resist this. It is already done. The character has been changed, as well as the break of its structure has happened through this. So we are in bearish. Let's go to daily. In daily time frame, last week I have showed it that the upward traction is very low, because it has already formed a double top in the daily time frame. And also as per the cup and handle, we have measured the depth of the cup was this guy was the depth of the cup we measured, and I said very clearly that this depth of the cup has been achieved almost 75%. You can see, guys, if I move this to here, this was the depth of the cup. Okay, this is the neckline, and from neckline, if we put here from the neckline, it has already done the 50% of the this range. Now it has started going down, and again when it came down here, there was a daily double top with this green and red. I beg your pardon, this red and green. Again we have this red and green. So again the market went up, and the range became very short, and we have already identified before when we have seen a very low very small red here in 4 hours. We marked that it has been happened from the 4-hour time frame. A double bottom has formed. If we go to 4 hour, you guys can see this is this guy created and this was last week, previous week, then last week, the week before the last week. So a double top, and at that time we said the market has a little chance to go upward, because the traction has already fulfilled here. So it didn't went upward anymore, rather it came down on the downside, and our prediction was it will come to this place. However, it has moved beyond that even. So these are the thing already happened. There was a weekly double top here which has not been respected, so we would like to remove these issues, and these are the lines where we should take care. This is the change of character has happened, and this was break of structure. This guy was the break of structure. Let me clean the chart a little, and this was the double bottom which has created this upward, and again when the price came here it started to show some reaction due to this area, this area. So this has been broken also, and now we are dealing here at the moment. This is the final which has caused the price. So my prediction was not so deep. I was predicting that it will come here and give some price reaction in 4 hours, or let's go to daily so we can understand. In daily, it didn't respected this double bottom. Rather, it respected. One day it respected. We have a indecision candle, went up, went down, and came down, came again to the same area where it opened. But the next day, the last day of the week, has taken out everything. So now we are completely bearish in day time frame. So we have to wait and see how it unfold in the coming market. In my opinion, why the price has stopped here is due to this red candle. This is the guy who has stopped the price. To be honest with you, this is the place where the price has stopped, or you can, if we clearly identify, you can see, guys, that this is the thing which stopped the price. This was the neckline where the price has been stopped almost. So the whole 75% of the whole cup has been taken out, and now the price is moving here. Let's go and see what we expect from here. For the time being, it's my opinion that let us remove these things. These are not of any value anymore, so we can remove all these things, and we have already analyzed. So we have a double top here, and again here was a double top in a 4 hours change of character. And if we consider in day, this is the break of structure has happened already, so there is less chance to go upward. However, due to such a big candlestick, my opinion to take trade something like this, that it will retrace a little bit, and this is the half of the total range. What I meant is this: if this is the whole range we have right now, as the double bottom was here, so this is half of that, so it will try this, test this thing again, and it will come back here. So if we do that, I will take trade here, and if we do that, we have expected a 329 pips in next week. That is my suggestion. So this is the way I see at the moment. In 4 hours if we go, we may have a better clarity here, and you guys can see that it is responding to this area right now. So maybe it will come a little bit more, maybe, but it will test this area without any doubt. And once it tests that area, if it fails on the upside, then it will come down to this level. That's it for this week. However, if there is a major changes, I will update the trade accordingly in my next video on Tuesday or on Wednesday. Thank you for watching. Please be careful. See the price action. The price may come down here. It's a very good zone that the price will be rejected here, and it will push back here, and it will try to break this line, this here, this guy, and if it breaks on the upside this line, then it will go bullish again. But seeing the candlestick momentum, I don't think it will be able to break this middle of the total range. This is the range we are operating at the moment. If you see, this is the range and this is the 50% of the range. Take care. Thank you for watching. Please do subscribe, share, and press the bell icon, so I will be delighted to share more videos with you. Thank you.